All right, good morning, everybody. Today is Monday, June 24th. Happy Monday. Hope everybody had a great weekend. The weather, at least along the East Coast, was really gorgeous. As you can tell, this is not Dan Russo. This is Nick Webb, stepping in for Dan while he's on his formal honeymoon. He had his informal honeymoon a little while ago, but now's the real thing. You can see, if you follow him on Twitter, see the handle there. You'll see all these pictures of Milan, and I'm sure we'll see some later pictures of Rome, and I believe actually Sicily. So definitely, today you should follow Dan Russo _ CMT in Twitter so you can catch all of this excitement. But for the rest of us, we're here today dealing with the stock market. And as people know, the market was pretty quiet on Friday. It was sort of sort of consolidate the gains of recent days. And the big question, I guess, going forward for this week is, can it continue to strengthen past that 2950 resistance level? It broke through it on Thursday, and it closed slightly above it, just a hair. So can it continue to break through? And then we'll obviously have to establish a new resistance level, which is going to be tough. There's one of the encouraging things was that the day started out Friday morning with all of the Iran news and the aborted attack that we were almost at war with a major country. And what was interesting is there was really no market panic. There was also strong IPO reception of the Slack IPO. So there's a lot of positives in the market right now. The fact that it didn't have any panic, the market is continuing to look to the Fed to potentially soften. So there's a lot of reasons for it to go up. One reason why it wouldn't is that money flow has turned negative on it. It's very hard for continued gains when you're not getting new money into the market. So that's something to watch as the week progresses. Will money start coming back into the market? So let's do the market in a minute. You can see the Dow, the S&P, the NASDAQ, they were all down a hair. Small caps continue to underperform. They were down significantly more. Bonds also were down. And again, if you sort of talk about it, the market was resilient in the face of the aborted Iran invasion. They are continuing to focus on the potential for a rate cut. You're hearing it more on the news. I doubt that the Fed will be able to hold off for too much longer. There's word about a July cut. If that does happen, that's more fuel to the market. So keep an eye on that. There was more trade tension in the afternoon. And again, the market didn't react as strongly as it has in the past. It did pull back slightly from it. There was a chance that the market would actually have an up day yesterday or Friday, but they announced that 5 more Chinese companies were on the list where U.S. is prevented to selling to them. So a lot more trade tensions. That has a devastating impact on these 5 Chinese companies. And so China obviously is very unhappy. We'll see what they do. There is a G20 meeting later on this week with Trump and Xi, and we'll see where that all ends up. Right now, the futures were pointing to slightly higher open, but it was really hanging in the balance. So by the time this actually hits the press, who knows where the futures will be at that point. So the stock of the day, remember, this is not a recommendation. This is just scanning through algorithmically and pulling out an interesting stock, in this case Reinsurance Group. And this is an interesting stock. You can see overall from a Chaikin Power Gauge rating, it's a very bullish stock. That means by and large the fundamentals are very strong. You can see we break down, the Chaikin Power Gauge is a 20-factor model, and we break it down into these 4 categories. So the financials are very, very strong. This is a well-grounded company, as you would expect a reinsurance company to be. So, limited long-term debt, good return on equity, those kinds of things. Earnings You know, it's been in the middle. It's had its up and down years. Technicals sort of and in the middle, and experts. That basically means that you know, the estimates and the analysts are looking good. There's not a lot of insider trading, those kinds of things. So by and large, this is a very healthy company, so that if you were to invest in it, it would not be, you know, one that is sort of just doomed to failure. Now, with that said, you can see that the price bars on this chart are very interesting. This is a stock that moves all over the place on a regular basis. So big price movements, big price swings during the day. So you have to be able to stomach that in the future. But just reading the chart the way we do at Chaikin Analytics, again, you start with the very bullish power rating up in the top left corner. You say, okay, so Chaikin views this well. You then look down at the bottom. You can actually see how we've rated the stock on a weekly basis over time. And you can see since April, we've been very bullish on this. Additionally, the next line up is relative strength. You know, how has the market looked at it? In this case, it has not outperformed the market. So, you know, maybe the market has sort of mixed feelings. It's not dramatically underperformed the market recently, but it is definitely slightly underperforming. The more interesting one is you go up two things, the Chaikin money flow. You can see that institutional money, what we call the smart money, is coming in very hard on Reinsurance Group. So this could be an area where institutions have spotted something, they're taking positions, and we'll see where it goes. So interesting stock. So what's gone on for the last 5 days? This is sort of a, you know, rather than just focus on yesterday, what's happened. You can see energy, not surprising with all the Iran tension, energy stocks have been going up. That's because oil prices have been going up. So oil prices have definitely begun to move because of supply concerns, and the energy stocks have fallen right along with it. Technology stocks, surprisingly, have also done extremely well. And again, in the face of China trade wars, that's somewhat surprising, but I guess last week was kind of a quiet week until the end of Friday. So we'll see what happens this week. Again, there is that G20 meeting. Down at the bottom, staples, but they kind of held their own. They just didn't go up or down. If you look at one industry that we like to focus on, transportation services, over the last 6 months, it's really been a dog because remember, the market's really performed well over the last 6 months. So this one has been underperforming the S&P by almost 5%. Still up for the year, but still but underperforming. You can see that we rate each individual company in this industry group, and we only have 4 bullish or very bullish stocks relative to 13 bearish or very bearish stocks. So it's a weak power bar. As a matter of fact, it's ranked 20th out of 21 subsectors. So this is a very weak subsector. And remember, this industry in particular is exposed to energy prices. So with everything going on in Iran, costs are going to go up, and you can see that it's negatively impacting all of these stocks. Let's take a look at JB Hunt, which probably is as impacted as any of these stocks. Again, because it's a large trucking company, you know, does the full US, and you can see it's just, it's a very bearish stock. As a matter of fact, there's a relative strength sell signal on this. Take advantage of a slight upward blip and sell. Money flow is really, really negative, and the relative strength is very negative. So this is a stock that really is very weak and looks like it might get weaker. And again, the big unknown in this equation is what happens with Iran. Moving on. So Friday, it says yesterday's, but it really is Friday's stock movement. There were some interesting ones. Humana is still, you know, they stopped their merger with Centene. They're basking in that. Baker Hughes is the other side of the energy coin because they have drilling interests all over the U.S., and the U.S. is probably going to increase that. And you've got the energy price movement. Baker Hughes has had a nice little run and should continue to, is my guess. And on the flip side, well, let's just, CarMax reported strong earnings. PVH is just having a minor recovery after a huge earnings drop. So they reported earnings a week and a half ago. Earnings was down, margins were down. So, you know, they're not selling as many Calvin Klein underwear as they used to. And basically the stock took a huge hit. It's barely rebounding now to get back towards where it was, but it's got a long way to go. L Brands had again, another apparel company. This one had a strong reception of their debt offering, so they're actually able to sell their debt. Altria, they have a big stake in Juul, and that's running into all kinds of regulatory issues. And sealed air containers, if you own that stock, you're in trouble. The SEC violations are beginning to stack up, so you may want to bail on that one right now. Moving on. So as we said, CarMax had a very strong earnings report, beat by 10 cents. That's why it was on that the trending winners report. But it's quiet day today, nothing in the market. As everybody knows, earnings season for Q2 earnings will commence probably in the second week of July. So you've got a little bit of time before this page gets filled up with companies reporting, but we're right on the cusp of it. And just as a side note, over the weekend, FactSet reported that not only are Q2 earnings going to be negative compared to last year's earnings, but now it looks like Q3. So that'll make 3 quarters in a row of negative earnings. So again, that is not helping the fundamental underpinning of the market. And it also doesn't help the economy, because without earnings growth, you really don't get wage gains. You don't get a lot of the things that a healthy economy is going to have. So last year we had huge earnings growth year over year. This year it's slowed down to a crawl. As a matter of fact, it's negative so far for the year. We'll see if that continues. There was hopes that the second half was going to be the rebound that everybody was looking towards. But with Q1 negative earnings, Q2 negative earnings, and now Q3 looking like it'll be negative earnings, that is a little bit of a concern. And that does, you then look at the market PE and say, is the market a little bit overvalued? So we'll see how that goes. Finally, just a couple extra bonus charts for your consumption here. I thought it was worth calling out mid caps because quietly they've been performing. Money's been flowing into it. They've got good relative strength versus the market. They're a little bit on the overbought right now, but you know, this is just a great story because for years they had underperformed their bigger brethren, and now they've caught up. The other one I just wanted to highlight is, wow, did semiconductors relative to the market. So this is semiconductors versus the S&P 500. It just has had a very, very rough month, which again, it's reflective of what's going on in China. So the good news is I don't know if any of the damage with China is yet permanent. In other words, if all of a sudden we reach a trade agreement, will that open up the doors and these semiconductors will all of a sudden start performing again? Unclear. Doesn't look like it's really been permanent damage, but you can see how the temporary damage is there. So again, a lot of eyes on this G20 meeting this week. If things turn out well, then you should see those prices reverse. So just a call out to get shakenanalytics.com. that helps you follow along with this presentation. Bye-bye.